Hi guys, welcome back to Investing Cartel. As per usual, we're going to go over the S&P 500 and the overall market before the start of the week. Let's go. Just to get straight into this, guys. For the first time in a long time, I am not in the market. I am currently in no positions. I've sold all my stocks, taken all my profits. And the main reason being, guys, this right here. That, gentlemen, is the biggest sign, the biggest warning for me not to be in the market right now. For any trader to be in the market right now. You know, as traders, we rely on technical analysis to plan our trades. And this is rule number one. Do not be in the market when the RSI is resembling the fucking Eiffel Tower and sitting calmly above the overbought line. Anything above 70 on this RSI, the relative strength index, is considered overbought. Where are we now? So if this is overbought, what do we call this? I call that stay the fuck out of the market. And look, guys, I'm not saying that it's going to go down tomorrow. I'm not saying that it's going to go down next week. All I'm saying is it is going to go down. And no, I'm not talking about doom and gloom. I do not think we're going to revisit the lows. However, like I've said in my previous videos, a nice dip to the downside would still be considered healthy. When all you see is green consecutively and everybody starts thinking that they are a stock genius, stock god, that's when you want to be out of the market. And guys, do remember, even if we dip from here all the way down to the 200 daily moving average, this would still be considered healthy. It's only when we experience something like this consecutively without a major pullback, in addition to a highly overextended RSI. To me, right now, this is all a perfect recipe for a sizey dip that I do not really want to partake in. And like I said, guys, I'm not making any like crazy predictions for tomorrow or the next week. All I know is that when the RSI is in this overbought region, everything that's based on technical analysis of stock trading is telling me not to partake in this market right now. And I don't care. I really don't care if the market goes up next week. I don't care if it takes 3 months for the RSI to go down to this point below the overbought region. I'm fine with being in no positions during this time, because as long, I sound like stuck record right now, guys, but this is literally rule number one for, you know, most stock traders. If the RSI is in this area, do not touch. That way, when the inevitable dip comes, there will be a chance, an opportunity to reinvest in companies that you believe in at a discounted price than if you had bought right here. This is all speculation. However, I do trust the RSI more than any other indicator that's out there. Just because I've seen it time and time again. When we get overextended here, it usually results in a nice dip. And all I remember from this time period, all the bears came out of their hibernation, blowing up social media, doom and gloom news, buy guns, stock up on toilet paper, tinfoil hats, you fucking name it. And at the moment, I'm not on their side. Even though I'm expecting a dip in the near future, with all the bullish sentiment in the market right now, I'm also on the side of a nice bounce. And you know, guys, we don't even have to go that far. We don't even have to touch this 200 daily moving average. We could just literally dip down to this old resistance that we broke. And you know, a lot of the time, in stock trading, old resistance has the potential to become new support and vice versa. You know, we could even just dip down to around this range, which would bring the RSI down a little bit. Time will tell whether it's like down enough by that time or not. This is also something that has potential to play out. And say we did come down to this point, it would yet again be another perfect bounce off the 20-day moving average, okay? Let me just remove all this clutter here to make this a little bit more clear for you guys. So if we imagine and extend this 20-day moving average to where we think it would go, the old resistance has a potential to become new support, which, by the way, coincides perfectly with this 20-day moving average. Okay? Like it has multiple times throughout this rally bounced off this 20-day moving average. So I'm not saying that's going to happen again, guys. You know, all I'm saying right now, I am happily out of the market. I've taken my gains. I'm sure over the past few months, a lot of you have done the same thing. Now, 2 trades that I've been talking about on my channel for a while that I actually implemented in the past 2 weeks has helped me see great returns. I took my profits. I was not greedy, and everything just worked out perfectly. For Tesla, what I said in my previous videos, I said instead of buying Tesla here, buy it when it makes contact with its 20-day moving average. Which, you know, like if you bought here, it would have worked out the same. But, you know, I prefer to rely on technical analysis. Everyone says you got to trade like a robot to be a good stock trader, and it makes sense. Take all your emotions aside, and that's what I did. I waited and I waited until this point of contact, and I entered my position. Long, baby. And then I rode this up for a 10% gain. I usually like to stay in my trades for, depending on the size of the gains, honestly, like 2 to 3 days mostly. And once again, it depends on the size of the gains. If I get like a 20% gain in one day, you better believe I'm fucking selling that bag. I'm not gonna wait around for that. I'm taking what is mine.
You know what's there? Waiting. Beyond that beach. Immortality. Take it. It's yours.
You could have said, oh, you took your profits here. You could have rode this whole thing up. No, I didn't ride this whole thing up. And you know what? I'm happy. I'm happy about it. I'm not a sour little greedy bitch. I'm learning to master my own emotions in this game. You gotta be happy with profits. You know, for all you know, it could have just tanked. And I could have lost 10%. As soon as I see it, I'm taking it. If I see 4%, like that's usually when I would be happy with taking my profits. And I got out of this trade with 10%. Why wouldn't I be happy about that trade? Even though this happened, even though I could have made, 50%, nah, for all we know, that could not have happened. So guys, take your profits and be happy with it. These small profits add up to a big pot of gold. All you need to do is remain patient. And then for the next trade that I did was Shopify. And guys, I implemented the exact same thing. This moving average strategy is so simple and it's working really well. But once again, they say the trend is your friend until the end. The thing is, you don't know when the end of the trend is. Just make sure that you're picking companies with a bright future, good earning reports, and a nice juicy track record. And in my mind, Shopify and Tesla are, both of those things. Yes, there's like some hype around it, but they back it up, okay? They back it up. So anyways, I did the same thing here. I waited for Shopify to dip down to the 20. I bought it right here. It dipped down for a little bit, but I was not panicking. I held it out until a few days later, cashing out at around 10%. And this, guys, is kind of why I like, not holding on to consecutive green days. Usually it's like 2 to 3 days. And, I would have held on to this for another day if there wasn't this giant wick here. Every time you see like a giant green candle ending the day with a long wick, that's usually a sign of indecision, because we started here, the stock got pumped up all the way to here before selling off heavily towards the end of the day. That was enough for me to take my profits and just enjoy life, be grateful for what the stock gods have blessed me with. All right? Okay, guys, that's it for this video. Thank you for watching, and please subscribe, smash like, and most importantly, happy trading, and peace out, guys.